This is the FM Gold channel of All India Radio. In the program Money Talk, now we bring you a dialogue on RBI monetary policy. The participants are Professor Aman Agarwal, Indian Institute of Finance, and Prakash Chawala, Senior Journalist.
The Reserve Bank of India today unveiled the 6th bi-monthly credit policy review, and as expected, they did not change the policy rate. Of course, there was some expectation in some quarters, but largely it was expected that the RBI would not go in for further rate cut because it had just done about a fortnight ago by 25 basis points. So as a result of which, the RBI kept what is known as the repo rate, or rate at which the commercial banks borrow overnight or the short term, at 7.75. And it did some changes in the SLR, or statutory liquidity ratio, but it also kept the cash reserve ratio unchanged at 4%. Now the larger issue which has been brought up by this policy is that the RBI governor in his post-policy press conference stated that he would like to wait for the budget, because budget is going to be a big event and it's going to be the first full-fledged budget of the Narendra Modi government, and it's going to really throw certain strong data, policy direction in terms of the fiscal situation or the fiscal policy direction of the new government. The RBI would also like to wait for the release of the GDP data, which is due on February 9th. So that it could get a further signal as to what should be the direction of the monetary policy going forward. So far, it has publicly committed that it is committed to reducing the interest rates depending on the disinflationary signals that are emerging. So what do you think would happen? Say, you think in the fiscal 15-16, one could expect the interest rates to come down only in fiscal 15-16? And if yes, in what quarter? Would it be in the first quarter or the second quarter? Or would it happen at all?
I think a very relevant question. I think, as you rightly said, the industry as well as the government was very clear with the way Raghuram Rajan has been moving forward with the monetary policies in the last 3 terms of not changing much, that they should not expect much to happen this time as well. However, to the surprise of the industry, that he did reduce 25 basis points for the bank from 8% to 7.75% couple of days back, and then he's also reduced the SLR, as you rightly said, by 50 basis points, which does increase some quantum of liquidity into the market, both in terms of bank having a credit offtake from the Reserve Bank of India through the repo rate system, and also the bank being restricted to keep less in the government deposit and to give more to the industry. In my opinion, I think everybody is waiting for the budget. This particular monetary policy review is more like an interim review which comes out, because what will happen in terms of the fiscal policy stand by the government is more of a matter of concern for the Reserve Bank of India and the governor, not in terms of outlays which more other people or the general public or industry looks upon from the budget. I think they're very clear of the fact that in December we reached 99% of our fiscal deficit targets which the previous government had kept and which was endorsed by the current government of 4.1%. And the governor is quite hopeful that they would be able to keep it within the limits of 4.1% fiscal deficit. If they are able to do so, I think this will be very creditable, and the way India has been moving forward in the last 6-7 months in terms of positive outlook towards the industry, towards the international arena, towards the funds flow which are coming from international
markets. The way
markets.
it has faced the challenges coming out of the US dollar. So while the other economies could not really come up to that kind of a pressure, but the Indian economies, Indian currency included, did really live up to the challenge which was thrown in by a strong US dollar. But I would also like you to comment on 2 issues. One is that Governor did refer, he in fact expressed his disappointment. The way the banks have not transmitted the cut in the interest rate which was announced in earlier policies, especially about 2 weeks ago. He also referred that whereas the banks have cut the deposit rates, the banks have not transmitted fully not at all, excepting one or two banks, not really transmitted the lending rates, the benefit that accrued to them, because the cost of funds have come down, which is also reflected in the bond market and the commercial paper also, which is available. So the avenues for the corporates to raise finance have also increased. So he expressed his disappointment, as also expressed his hope that the banks would know that here, even though he has not changed the repo rate now, but what had happened, because there is a lag, what had happened in previously, the benefit has not been passed on to the borrowers.
As I was saying, you see, given the economic scenario and the positive outlook which the world and the Indian industry has been addressing in the last 2 quarters after this new government came into place, has been quite alarming in the sense that the growth figures, which are around 5.5% of GDP, are expected to even go to about 6.5% given the trends which are going on. The FDI flows have gone up, the FII flows have gone up. There was no expectation of FDI limits to be met. We are almost at the same levels. So given these positive indicators, we see things to be more improving. As you said, the RBI giving this benefit to the banks to allow industry to take off, the credit offtake not taking place. The industry is also with an eye watching as to what is to take place in a month's time. They cannot make major plans and investments not knowing what the budget holds for them. And that is one of the major reasons they are not even approaching the banks for most of these projects to be undertaken. Only those credit lines which are functioning would function. Also, the banks have become skeptical in the last 3 or 4 years in terms of doing lending, whether it is housing, whether it is education, whether it is large projects or mini-size projects or MSME projects. They have become skeptical given the bleak conditions which are there, not only for exports, but also for
the high rates of non-performing assets as well.
That is why they have become a concern for them. And looking at the international markets, the way things have happened internationally in banking arena, they have become skeptical. And that's why they would like to stay put for some time and then start giving out these funds. As I said, both in terms of the supply and the demand side, there is a restriction which is coming. Demand, as I said, the industry.
But why are they not reducing the spread? Because what really Governor was referring today, this morning, was that whereas the deposit rates they have reduced, but the lending rates they have not reduced. So he in a way gave them some margin. He said maybe because they want to maybe repair some of their balance sheets, because the balance sheets need to be repaired in view of the very high rate of non-performing assets, which have been a matter of concern not only for the banks and the RBI, but also the government being the owner of these banks, public sector banks.
Dr. Raghuram, one of his statements also mentioned that NPAs is not a matter of concern because these are not toxic assets as of now in India. But certainly these are a question mark to the operations and the profitability of a bank. And as you rightly said, it is important to window dress the balance sheet because it is the financial year. In accounting terms, we refer to it as a window dressing, which is done to show that the balance sheet is good. The bank is cash rich, there are no problems, has sufficient money to take up larger projects. So that is also holding them to actually transfer those benefits which have been given out or which have even been given now to the industry per se.
He also, in the context of the NPAs, Governor Rajan did refer to kind of window provided by the RBI to the banks that, they have been given this option of converting the loans into equity, larger amount of loan into equity, and a lot more flexibility has been given to the banks that in case they find, and mind you, you talked about the governor referring to the NPAs and he did mention it again today in his post-policy press conference, that all NPAs need not suffer from any stigma, because NPAs not always result from, say, the bad intention, or they are a factor of, say, the economic environment around you or the global policy risks hitting you on your face. So he also referred to kind of a friendly or the accommodative kind of approach to the bank so that they can go and work in consonant, in partnership with the borrowers, people who have run into problems.
The industry is cautious, the banks are cautious. Indian banking industry has also been one of the good banking industries in the last 4-5 years worldwide, given the kind of debacles which took place in the banking industry in the West. It also showed that it has been not because of the excessive efficiency of regulation, but more because of the traditional approach of the banking industry, as we refer to as the conservative approach in banking, which has led to the safeguard of the banking industry in the last 4-5 years of the international debacle, which has not been seen in the Indian front. That goes on in the banking industry. I think which is now expected is the new wave of banks which are expected to float in, the new banks, new systems which are coming in, where new licenses would be given out, I think they're going to play a little more bullish and aggressive role and try and make some of the more traditional banks a little more competitive in the next quarters to come. We are going to see that come up only post-budget, once the approvals to new bank licenses are given out.
And the payments bank
system comes as well. That's where we will see more aggressiveness. So I think the next 2 quarters would address more of these benefits, moving to the investors and the consumers directly, and the banking playing a more proactive role in the growth and development of the country.
And the other issue which the governor referred and his deputy governor Urjit Patel also referred was the international situation and the kind of risks which are emanating from the international economies and the problems, especially from Eurozone, China, Japan, and somewhat better position in the US. And Urjit Patel gave a very interesting example. When the two larger economies, there's a problem, and then the emerging economies, sometimes economies like us, get crushed in the middle of it.
You're correct. You see, it is normally the belief which goes on in economic policy making, what you're referring to. I was recently, only about 10 days back in the United States for about a fortnight. And though the economic data coming out of central banks and other economic policy magazines clearly shows that the situation is improving in the United States, but the credit offtake is very low. The market positions are very bad. The employment positions in the United States seem to be quite bad. The Americans are not feeling that comfort zone which they used to enjoy all the 70s, 80s and 90s. And I think that's a major cause of concern for the economy not still coming forth. Saying that becomes an edging position for India as an economy, because that has helped now the oil to actually fall down internationally. The international price per barrel going down 50, it may even go down further down to maybe about $35 a barrel. And if that happens, own fiscal position would increase, the bearing on the exchequer for the foreign exchange would reduce, and this will benefit in the long run.
It is also believed it's a reflection also of the global slowdown. And in the context of the global slowdown, the big worry was conveyed in the policy document today from the European Central Bank, which is going in for now quantitative easing, and which would have some impact of the larger flows maybe finding into the emerging markets and having an impact on our rupee and exchange rate stability.
India, as compared to Europe or the United States, is different on two aspects. One is that India's purchasing power as well as the growth comes from internal factors and not from external factors. External factors in the sense, in the United States or Europe, large amount of goods and services actually are earned and saved from the overseas factors coming into play. In India, it is done within the country. The second component which is important to be observed is that the India, as of today, is one of the safest investment zones, attracting investment from all over the world, including United States. You see, in the last 6-7 months, the current Prime Minister has been able to woo anywhere about 16 to 18 billion dollars, which is going to come in the next 3-4 years in the plan of infrastructure itself. Now we are looking at such more investments coming in, whereas such investments are not going into other progressive zones anywhere in the world. Now these are some things which is a positive outlook, which is not there with Europe and the United States.
You talked about
that makes situations better.
Domestic economy, but there is this concern about inflation. Now oil certainly has really helped tackle inflation, but there are some seasonal factors again which can come into play. So to my mind, governor looked or appeared to be still cautious when it comes to inflation. Obviously, he is hopeful because his main worry is he doesn't want to really go forward in one direction and then reverse it.
The governor, first of all, not to forget that he was appointed by the previous government. Secondly, it is a ticklish position. He can always be caught upon, and he needs to be careful and take a balanced view in terms of projecting and making projections. If he shows that everything is very good and inflation is very much under control, he may be wooed by the government to introduce certain measures which may actually lead to inflation rising further, which he has been actually talking with the ministry and trying to control, not to let them happen. So given that, I think he needs to take a balanced position where he says inflation seems to be under control.
To conclude this discussion, it would be fair to say that the policy that was unveiled today, the real picture is still to come, because the big event is going to be the budget, the big event is going to be the GDP data, and the disinflationary mood or the pressure, disinflationary trend which is there now. The governor would like to be still more assured of it. Thank you very much.
Thank you.
You were listening to a dialogue on RBI monetary policy. The participants were Professor Aman Agarwal, Indian Institute of Finance, and Prakash Chawala, Senior Journalist. It came to you in the program Money Talk, produced and presented by the News Services Division of All India Radio. This program is also available on our website, newsonair.nic.in. You may email your opinion about this program at talksensd@air.org.in.